Hey all, good morning and welcome to ShareTreck. This is Raj here. Friends, I'm sorry I didn't make any videos during the weekend. I was just stunned at the turn of events. I also felt a bit stupid because we had seen this coming all along the way, and I had not taken it seriously that the tariffs would be on. But looking at what's happening with the markets right now, I'm thinking that this is a game of chicken probably. I could again be wrong because as a retail investor, we have a different line of thinking. That's why we are still retail investors. You look at Dow futures, it's only down 1.22%. S&P futures is down 1.37%, and Nasdaq futures is down 1.59%. And I ask myself, why is it so? It should have dropped even more. So I'm not taking the opportunity to use the pre-trading hours and do some pre-market trades to get rid of my negative stocks. My portfolio is looking horrible. I didn't even feel like opening it, so I didn't make my portfolio disclosure video. I will get around to it very soon, and I'll also narrate the history, hopefully in better times and in a very short time period. But for today, I don't know what's going to happen. There could be general widespread panic when the market opens, only for it to bounce back. I would summarize that the global markets were shaken as the dollar rose and oil prices spiked and stock markets fell after tariffs were imposed on exports from Canada, Mexico, and China. US Treasury yields also increased in response, and stock futures dropped, and an Asia Pacific share index fell in response to the trade measures targeting key trading partners. And from our Canadian perspective, the Canadian dollar was hit severely. It hit its lowest point since 2003. And both the euro and Mexican peso also weakened because, it's counterintuitive, but when there is a problem, even within US, money rushes into US dollars. So I still don't get it. I would have expected gold prices to go up, but pre-market gold is looking a little weak. And the escalating trade tension is driving investors towards safer assets with worries that the tariffs could rise inflation, keeping US interest rates high, and it will probably harm foreign economies. And that's why this flight of money into US treasuries and the yields are falling, because the treasury prices are going up, and the yields which are fixed now seem to be reducing in response to the increase in the price of those bonds. So that's the way I am understanding it. And sectors most affected by the trade war are the automakers and electric vehicle manufacturers. And also the higher tariffs could create something similar to what happened during the COVID, because the supply chains are going to be hit, and transportation stocks might probably go up. The expectation of reduced US demand for the most expensive imports is also boosting the dollar's appeal as a safe asset. On the other hand, at least from the Canadian perspective, I know that many of our provinces have taken US liquor out of the shelves, and that is billions of dollars worth of business. So that also has to work out somewhere, because the cash flow from Canada is not going out, and it's not going into US either. And if you look at the amount of tariffs that has been levied on various countries, we are looking at a huge amount of dollar trade that comes under the impact, and the price of the dollar goes up when there is more demand for the dollar. So if this dollar trade is being stepped up by 25% because of the tariffs, then I think that there's going to be increased demand for dollars, at least a 25% increase. And that should in turn lead to strengthening of the dollar. And of course, we have the economic data also coming up, but I really don't know how much it's going to impact the markets. On Tuesday of this week, we are going to get the job openings and labor turnover survey, referring to all open positions on the last business day of the month. And that data will probably register to a few people. But before that, if Trump does something else, like if he says that, okay, instead of 25% tariffs, he's going to bring it down to 10%, then the market will recalibrate itself. And on the other hand, if he comes back and says, I'm pissed off, and instead of 25% tariff, it's going to be 35%, and that could have a different effect altogether. So the problem for us retail investors is that we can no longer anticipate what's going to happen. We have to actually see what happens and then take a decision. It's going to be a very difficult period of time to navigate. And we also are going to get the January non-farms payroll report, and that's going to come out on Friday. Probably it will indicate whether jobs are gained or jobs are lost because of the tariff, but I don't know what the numbers are going to be like and whether they would make any difference at all, because if Trump keeps on making executive orders and institutions start getting dismantled, then US dollar as a reserve currency comes into a question, and that should, in theory, boost the price of gold and potentially Bitcoin, but I'm not seeing any of those things happening as yet. And also the markets have not dropped as much as I thought it would in the pre-market action. So I really don't know what to anticipate. And friends, I am inviting you guys to let me know what you think is happening and what's likely to unfold this week. Please use the comment section. This is the best time for us to share information and ideas. So I request that you come and do that out here. But I'll just, before I finish off this video, I'd just like to add my own personal thoughts and share some feedback on the technicals. So I'm looking at our charts out here. I'm just going to go in for a 1-day chart and recalibrate the charts. So we still have a very strong support out here today, and in pre-market we are at 21,237. So 21,237 keeps us well above the support. We came down a little bit and then we jumped back up again. So there seems to be a little bit of confidence coming back into the market. Maybe some people know what's going to happen. I wouldn't put it past the realms of possibility that with this administration, we might get a whole lot of these kind of situations. And potentially a lot of insiders are going to make money by buying these on the cheap and then selling it when the news gets reversed. I'm thinking that those kind of events might be there throughout the next 2 years until Congress gets reassigned. So who knows, we may probably make a lot of money this year, because the market action that I'm seeing here seems to indicate that there are some people who think that nothing bad has happened and that things are going to look better. That's why they are buying up, and the support line seems to be holding very strongly. So I'm not going to start running like Chicken Little right now, but I'm going to be very, very alert and careful. Look at the 10-year yields, and they had gone below this diagonal line of support, and they're inching back close to it and trying to get back on top of it. So that seems to indicate that even though the money is getting back into the US bonds, it has not gone back in violently as I would have expected. I would have expected it to have crossed the 21-day exponential by now if things were as bleak, but that has not happened. So I'm thinking that we have to wait and watch how things happen. And in this particular market, it's very difficult to game out what's going to happen, because there are going to be policy decisions that we think might be impossible that may come out and actually happen, and there could be constitutional crisis on the way. So all the bets are off. And the most confusing thing is that if any other country had these kind of systemic risks, their currency would have dropped like a stone. But because this is the US dollar and it's a reserve currency, that's not happening. But with all these kinds of push and pulls happening and so many trillions of dollars in deficit, I think the US is pushing its reserve currency status too much. And that's what my contrarian thought would be. Let us see how that turns out. And hopefully saner minds prevail and things start looking better soon. Now let's just take a quick look at our AI stocks. Google is down only 1.88% and it's still above the line of support out here. And if I look at Meta is also still looking strong. It's down only 2.09%, but it's above the 21-day exponential. And it's very close to the upper limits of the bull channel that we were on, so it's not looking that damaged either. Amazon is also not too bad. It's still in the bull channel. It's still making higher highs and higher lows. Microsoft is also not looking that bad. It's down 1.30%, and it's not dropped as much from yesterday. So I would say that we are not too bad considering all the drastic measures that have been taken. Nvidia is down 2.52%, but it's still in the consolidation range. It's not I think overall, I'm not able to make any sense of what is happening. I would have expected all these shares to have dropped even more. So this was the initial reaction, the gap down, and that came up somewhere on the 24th. So the smart money already made the move, and now they are sitting with the cash ready to buy, and probably they have started nibbling today while we retail investors are licking our wounds. So I'm not selling anything today. I'm going to hold on to all my positions. I'm just going to sit tight. Of course, I have got a good deal of exposure to FNGD, which is a short position. And I think that FNGD might come through for me today. It's already up 6.02%. So if I get a chance to make some profits out there, I'll take those profits. That's my game plan for today. And if we look at genomics, let's go to genomics and look at the damage. The damage was not as severe as I would have expected, because any given day genomics suffers this kind of losses. It's not that bad considering the action that has taken place. And Verb is very much down 10.64%. So the market is not biting genomics today. DNA is down 2.17% in pre-market action. Caribou is recovering a little bit. CRISPR Therapeutics is down 3.22% in pre-market. Grail is down 7.20% in pre-market. Prime down 1.43% in pre-market. And we have Altimmune down 2.11% in pre-market. Beam was down 3.55% in pre-market. And then we have Bluebird Bio down 4.52% in pre-market. Allogene down 3.33% in pre-market. And mRNA down 1.60% in pre-market. ArcG down 2.65% in pre-market. PSCB down 3.90% in pre-market. Intelia down 3.78% in pre-market. Illumina down 2.82% in pre-market. IMTX no trades pre-market. Editas flat pre-market. Iowa down 2.39% pre-market. Unicure down 9.40% pre-market. It has still not begun the gap down, and Vertex is up 1.03% in pre-market trades. So that is the lay of the land, my friends, and I'll catch up with you again with my next video. But I want to hear from you guys. What do you think is happening in the market? What is your theory, especially our friends in the US? Do you think that Trump might reverse this order or reduce the tariffs and we may see a bounce back again? Please let me know. Bye for now, friends.